Hello and welcome to another daily market update by Market Intel. Today we want to talk about Walmart. It's in a very interesting position on the chart at the moment. So we are expecting a turnaround very soon. I think that's always exciting. So we're going to take a look at that in a minute. Also, make sure that you register on dailymarketupdate.com, our website. Here you can register completely for free and you will receive daily free Elliott-Wave updates about oil, stocks, cryptocurrencies, the Nasdaq, the S&P 500, and gold. So when you are on this website, you can then select the asset class that you're interested in. Today we want to take a look at the stocks. And here you can see that one of the recent updates was about Walmart. So you can also click and take a look at the other stocks that we're covering. And when you scroll down, you can actually see that there are also stocks from the previous days. Okay, so we update 4 stocks per day at the moment. So at the moment, Walmart is potentially interesting. So we should take a look at the 4-day chart first. That gives you an idea of the longer term outlook. What we do, we hide the text. This is our written analysis that you can read through in your own time if you're interested. Now, on the Walmart chart, we had pretty aggressive sell-off end of last year, and we now see a recovery. And we're going to take a look on the shorter time frame in a minute what that means and try to unravel and understand the shorter time frame wave count. But you can see here on the 4-day chart that the market in our primary scenario completed a B wave top. That's a corrective rally, completed that end of last year, and then after that a pretty impulsive looking downtrend started. And the current assumption is that this is a C wave. So this C wave that probably started end of last year belongs to a wave 4, a larger degree wave 4. So you can see that highlighted in gray. The idea is that an A wave bottomed here, that was in 2022. Then a large corrective rally, and the C wave has started to unfold right now. Because of the structure of that corrective wave, it might be that this 4th wave or this C wave will complete the 4th wave above the A wave low, and that's at $117.27. So overall, however, that's pretty bearish outlook in the medium term. It is possible, it's entirely possible, that this 4th wave already bottomed here in 2022. And this was a wave 1 to the upside, this rally into the end of last year, and we're now in a wave 2 pullback instead of a C wave down. But we should be able to recognize that very soon, because the C wave down should be an impulsive sell-off, should be a 5-wave move, whereas if this is a wave 2 to the downside that's unfolding now, it should be a corrective pullback and the structure should be different. However, in both scenarios, we would expect lower prices in the medium term. However, there is a clear level that will indicate if something more bullish is going on, and we are going to take a look at that on the shorter time frame. But just to make that very clear, in the short term, in both the primary as well as our alternative scenario on the 4-day chart, we expect further downside, because we expect that either a B wave topped here or a wave 1. There is a breakout point that you can clearly see here, which is at 169.94. And yeah, it would reset probably that B wave a little higher. We see that now on the 3-hour chart, which is our shorter time frame wave count. Here you can see that the B wave likely ended end of last year. That's the primary scenario. I just talked about that on the 4-day chart. If the B wave topped here, then the C wave to the downside is unfolding right now. And the C wave is a 5-wave move. And you can see that in magenta. In this C wave, wave 1 bottomed end of 2023. Wave 1 of wave C. Since then, we've seen a corrective rally that started, end of last year. A corrective rally in a wave 2, which has nearly reached our target area that was also previously communicated. This wave 2 corrective rally has nearly reached the area between $164.10 and $170.42. It's the area between the 61.8 retracement and the 88.7 retracement. A break beyond the 88.7 retracement would indicate that something more bullish is going on. I'm going to talk about our alternative in a minute. But in the primary scenario, this wave 2 should complete in this target area. We should not exceed it, and we would expect a turnaround to the downside in a third wave of the C wave, which would then also take us below $145 in the medium term or even in the short term, because this is a lower degree now. So we're taking a look at the 3-hour chart here. So it should not take too long, to be honest. So it is very much recommended to watch this area. It is an area where it might be reasonable to open some short trades. That's of course up to you. But if you do that, just be aware of our alternative scenario here on the 3-hour chart, because it could be that this B wave, this B wave extends a little higher, that it never finished. This would be our short-term bullish alternative. However, it would still lead eventually to the same outcome. It would simply be a delay of that C wave to the downside. The B wave would then not have finished end of last year. Instead, we are still in the B wave. It might form one more high above $103.08, but that's only our alternative scenario that we assign a 33% probability. In the primary scenario with a 67% probability, we'd like to see the price go a little higher in the short term and then show a reaction in this resistance area, in this target area. At the same time, at the moment, there is no evidence yet for a top in place, but we expect that fairly soon. That's my update about Walmart. Hope you enjoyed the update. Make sure that you register on dailymarketupdate.com. Thank you very much. Bye-bye.